Good morning, Armor Insiders. Hope you had a wonderful weekend. You're staring at a chart of IWM. We're going to get to that in just a minute. Let's remember what we're doing here. This is a virtual hedge fund, chief investment officer, portfolio manager on the desk. That's you. I'm going to share with you information about the stock market right now, where we are in the cycle, what's the process at this stage of managing a portfolio in a ripping mechanical bull market. What are we supposed to be doing now? We're going to go over that. Going to go over the number one stock chart to look at today and understand the implications of it. Okay. I'm going to go over the number one investing idea on my desk right now that I may be putting capital into today, next couple of weeks. Who knows? Waiting for the algo, waiting for the right setup. But I'm looking to get on this one particular investment. It's been on the Armor whiteboard for more than a year. Probably a couple years. And the setup right now, the reward to risk is so perfect here. I'm going to have to put some money to work. But before I get to all that, remember, you got to take the information I'm sharing, any other information that you're collecting other places, figure out your strategy and execute your strategy, risk tolerance goals and all those things. You've got to be the smart money. Take responsibility. Okay. So let's dive in. We are in a ripping mechanical bull market. This is going to be a short morning meeting. It's not very hard to explain. We're in the stage right now where things are melting up and we're just enjoying the ride. We are maxed out from an investing point of view, have been for quite a while, but we're also maxed out when it comes to how many stocks we're following and we own. Okay. And truth be told, it's more stocks than I want in my portfolio. And so there's stages in the cycle where you'll get so many breakouts and you'll earn the right to take more risk because you're making a lot of money. And so you'll book some profits and roll it into the next idea. And then you have to recognize when, your dance card's full. I mean, it's just full. You can't manage more ideas. I'm already past that level. Because our job at this stage in the cycle is to manage risk. How do we do that? There's two ways. Raise your stops as you go. So every day I'm looking at my stops and then I'm looking at them again. Okay. You got to keep vigilant about where the real stop is, not where you want them to be, not your hopes and your desires, but look at the chart. What's the price telling you? What's the stop? Move your stop accordingly. And the other thing to do is to book some profits at targets. You've got positions down here and they've blown out to here. You don't have to wait for a huge reversal to the downside in the home market. You can start shaving some off and build up your cash position again. The other thing that's important about that is that any new position you take now has to be funded from profits. It can't be more cash. It can't be, God forbid, margin. At this stage in the cycle, see, it's very hard for investors to execute correctly because it goes against your emotion. When the risk monitor goes green on November 2nd last year, and I come on and tell you on November 6th, this is the best risk monitor green we're ever going to see. That's the time to put on a lot of risk. And even I didn't put on as much risk as I want. I mean, but we put on a lot. Right? We were buying double and triple the index. So it's created a nice run for us. But even then, let's just focus on doubles and triples. Let's get the indexes, right? Okay, then the next stage was after that sell-off, the beginning of January, and we had that tight pennant formation in the market. Now you load up on all your individual names. We've done that, and they're blowing out. We're at that stage now where alpha is going to come from the following chart, okay? That is the small cap index. So if you think about it, we started here, double and triple the S&P 500 right down here, double and triple. So we're collecting significant gains off of double and triple the NASDAQ and the S&P. And then in this tight consolidation, this green box in here, that was the time to book some gains or use some cash and roll into all your favorite individual stocks. And that's what we've done. Okay. Now what we're looking for is the equally weighted index to break out above 160. And I highlight for you again, small caps. Take a look at the small cap index and let's zoom out a little bit. Small caps are still locked in pretty much 2-year bear market, right? They've gone nowhere in 2 years. Blew out earlier in this market run and then came back down to test. Okay. So what we're at right now, and this is what I find most compelling. And I talked to you guys about this a couple weeks ago, and Monday morning, I'm starting to talk about it again because it bears paying attention to. The alpha from here, I continue to believe it's going to be small cap stocks innovative growth stocks, concept stocks. So that's where we are in the bull market cycle. The mechanical bull market starts out with leadership, and everybody complains about how it's thin market, there's not enough breadth, blah, blah, blah. And we're all making a ton of money on double and triple the leadership. Then if it's a true mechanical bull market, alpha shifts to small caps, innovative growth, concept stock. And so at this stage, what an aggressive portfolio is doing, you've taken some profits off of your big cap leadership and you've started to seed your portfolio with your favorite innovative growth names, your favorite small cap names, maybe some concept stocks, okay? And you're getting ready for that next Roman candle phase in the market, okay? This is not a prediction that small caps have to go up. This is a comment that the reward to risk at this stage in small caps, innovative growth concepts, perfect here. They break down, you get out, that's what stops are for. They take off from here, the reward should be enormous, okay? And what I find really compelling, and I'm just going to blow it up for you again on small caps, we've had two challenges of the 50-day moving average, this black line here, this green box and that green box. So this green box here is the risk monitor turning green. And we made some good money on that explosion in small caps. Then they've consolidated, made a double bottom at the 50-day moving average. So when you see that happen, that's graphic representation of institutions supporting small caps. That institutions have patience. Individuals have no patience. They chase things that are running. Institutions are running billions of dollars. They can't chase things that are running theoretically. They mark up their portfolio. But what they do with the meat of their buy order is wait for weakness to a key location, and then they step in and support. That's why the 50 and 200-day moving average are so important, because that's how a lot of money's run. So we got down there twice. Support came in aggressively at the 50-day moving average, that black line in here. Okay. Now, last week on Friday, we broke the downtrend that the market's been in, small caps have been in since the peak in December. Okay. This should start the next leg higher in small caps. I look forward to trading with all of you on the live desk. We'll start that at 9:30. Remember, if you can't be on the desk with us all day, there's a couple things you can do. Armor Report. There's a subscription there. You get the morning meeting and the captain's log before the market opens. You can join us on the desk as an Armor Insider, trade with us all day. Armor Insiders can't be on the desk all day. I'm doing updates on the hour, on the half hour normally, right? Specifically 2:30, 3:30, 11:30, okay? But if you come in and you want help, want to know where we're at, just ask me, direct message me, give me a call. I'm happy to share the information with you, what we've been doing. And of course, for those of you who just can't trade, you got a job and you can't be on the desk, hey, direct message, call me. Maybe it's the right thing for us to work together. I can help you out there. So everybody, at the end of the day, remember, figure out your strategy, execute it, take responsibility, and be the smart. Have a great trading.